Hi guys. Today we will analyze Wells Fargo stock, and calculate its intrinsic value using two different valuation models. Enjoy! Hit the like button and subscribe to my channel if you want to see more videos like this. Technical analysis. The long and short-term trends are both positive. Support level is around $53. Strong support level is around $52. If it breaks, the next support level is around $48. Resistance level is around $58. The stock has an average volume of 30 million. This is a good sign as it is always nice to have a liquid stock. The stock is currently trading in the upper part of its 52-week range. The S&P 500 index is also trading in the upper part of its 52-week range, so it is performing more or less in line with the market. Intrinsic value. Buy low, sell high. We have heard it many times before. But how to know when it's low, and when it's high? The intrinsic value of a stock is its true value. It refers to what a stock is actually worth, even if some investors think it's worth a lot more than that amount. Intrinsic value is important, because it can help investors understand whether the cost of a stock is undervalued, or overvalued compared to the market value of the stock. Valuing financial institutions. Understanding why financial institutions are different from traditional real sector companies is key. Banks function differently than traditional cash flow-driven companies. Traditional companies create products to make money. The products of banks are money. Banks are highly levered and they do not reinvest debt in the business and instead use it to create more money. They make money via interest. So, they view debt and interest differently. That's why, our favorite discounted cash flow valuation method doesn't work for banks and insurance companies. Intrinsic values calculations. Let's calculate the stock's intrinsic value. For more accurate results, we will use two different valuation models to calculate the intrinsic value of the stock. The excess return model. This approach is used for financial institutions where free cash flow is difficult to estimate. Then, we will use valuation based on earnings per share, EPS, 5-year average PE ratio and expected growth rate. First model. Excess return model valuation. This spreadsheet contains some financial data that we will use for the stock valuation. In this valuation I will use margin of safety. 30%. Once we actually figure out what we think this stock is worth, we are only going to buy the stock if it gets 30% of what we think it's worth. It gives us a big margin of safety if our predictions are wrong. In other words, when something is worth $1, I want to pay only 70 cents for it. I want to be conservative with financial institutions. So, my margin of safety is 30%. According to our formula, the fair value of the stock is $70.95. When we apply the margin of safety to that value, the fair value of the stock would be $49.67. That's the price that I want to pay for this stock. Second model. Valuation based on earnings per share. This spreadsheet contains another financial data that we will use for the stock valuation. The current earning per share price for Wells Fargo is 4.95. Minimum rate of return. I will use 12%. Because when we invest in individual companies, we are looking for a higher return than the S&P 500. For Wells Fargo, analysts forecast growth rate around 8% per year in next 5 years, and future PE around 14. I will use 3 different scenarios for Wells Fargo Company: bad, average, and good. First scenario. Wells Fargo will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be low, 4%. Future PE would be low, 10. In this case, the fair value of the stock today would be $25. Second scenario. Wells Fargo will have average performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be average, 6%. Future PE would be average, 12. In this case, the fair value of the stock today would be $36. Third scenario. Wells Fargo will have high performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be high, 8%. Future PE would be high, 14. In this case, the fair value of the stock today would be $50. As you can see, today the stock is overvalued, $55, if we expect Wells Fargo's medium-high performance in future. Wells Fargo is expected to show a small growth in next years. And the stock is overpriced. I don't own this stock, but I would be happy to buy it when it drops below $40. Company strengths. Wells Fargo is one of the largest diversified financial services firms in the U.S., with a nationwide network of several thousand branches and a large base of financial advisors. Wells Fargo provides a full range of consumer banking, commercial banking, and investment banking services. The company remains one of the top deposit gatherers in the U.S. with the third most deposits in the country behind J.P. Morgan Chase and Bank of America. The company originates roughly one of every 4 residential mortgages in the United States. The company is catching up with investments in technology and new consumer products to grow fee-based charges and loan balances. Wells Fargo's retail branch structure, advisory network, product offerings, and share in small and medium-sized enterprises is difficult to duplicate, ensuring that the company's competitive advantage is maintained. Risks. The company's main risks are a U.S. recession, decline in consumer loans, and increased credit losses. With the asset cap remaining, Wells Fargo will be unable to materially grow its balance sheet, causing the bank to miss out on a key earnings growth driver during an economic upswing. It is very difficult to predict when the asset cap will be lifted, and there could be additional regulatory bumps along the way. Wells Fargo may not reach the types of returns and efficiency that peers like J.P. Morgan and Bank of America have achieved. The company is expected to show a small growth in earnings per share. In the coming 5 years, the EPS will grow by 8% yearly. Based on estimates for the next 5 years, WFC will show a small growth in revenue. The revenue will grow by 2% on average per year. Thank you for watching. If you found this video helpful, please hit the like button and subscribe to my channel.